Hey everybody, I wanted to give another rundown of the big, beautiful bill. There seems to be a lot of confusion out there, and believe it or not, I have to verify everything because it's crazy. I read one article, it says one thing, and it's completely contradicted by another. I get flat out black and white wrong answers from AI. It's insane what I'm seeing out there. So I've done the best I could to break this down in a few different ways and hit all the important specific topics that are out there on this big, beautiful bill in a nice, clean way. So let's start with the brand new provisions. Okay, brand new things that are in this bill. No federal income tax on tips or overtime pay. So that is in here, and we'll explore a little more about that, the timeline of that. Baby savings accounts for newborns, they're still working through the logistics of this. They put this in the bill and nobody really had plans on how and who and where to open these things and how the money gets in there and all that stuff. But if you have a baby between 25 and 28, I believe it is, 2025 and 2028, the government's going to give you free money and put it into an investing account. Details to come. They're squabbling over the details of this right now. Enhanced tax brackets for businesses, tax breaks for businesses. There's the new senior discount that I've talked about and we'll talk about today. Okay. Now, what's permanent? So here's the thing. There's stuff that's permanent and there's stuff that's not permanent. One of the cool things that they did was take the mystery out of our tax brackets. They were supposed to revert back to the older tax brackets at 15%, 25%, 28, and so on. But we're going to keep the 2017 Tax Cut and Jobs Act tax brackets. So it's going to be 10, 12, 22, 24, so forth and so on. So that's nice. We have some stability in that. They made that permanent. I was happy to see that one. I also like the fact that they did the standard deduction, the higher standard deduction. So not only did they increase it for this year, but they made it permanent. It simplifies our tax return. Most people aren't itemizing anymore as well. And so you'll see some of the nonsense things they did because it's not really going to affect a huge amount of people. If it affects you, that's wonderful. You get to take advantage of it. But the higher standard deduction that simplified our tax return is staying. Estate and gift tax exemption increasing to 15 million per person and indexed to inflation. That is staying. That is in there permanent. Now, you've seen that obviously they can change these things, but it takes everybody agreeing. It takes a bill getting passed all the way through and signed in order to change stuff like this. It's not just a regular everyday negotiating table thing. 20% small business deduction. So small business income deduction. This is for all small businesses, and there's lots of qualifiers on this. They get to deduct from the taxability 20% of their qualified income. So you'll see a lot of small business things out there. There's a whole section on that. 100% bonus depreciation. Another one of these business things can relate to investment, real estate, things like that. You get to streamline and speed up the depreciation of things, business assets, cars, stuff like that, much faster than over the life. So historically, it's been 30 years, 40 years, 50 years, the usable life of the asset. Employer student loan payment exclusion made permanent. This is another neat one. So employers can pay off their employees' student loans and not have to pay taxes on that income. It's kind of a neat little spin here. So you might start seeing these bigger employers having more benefits related to paying for education. 60% of AGI for charitable contributions made with cash. So there's a couple of charitable contribution additions and subtractions. Basically, they're saying you can donate up to 60% of your adjusted gross income. I've only run into one person in my life that donates more than the income they have. And in that case, it rolled over to the next year. And so they were able to take the rest of that deduction the next year, which is nice. And then 1,000 and 2,000. Here's the other charitable cash donation deductions for non-itemizers. I've talked in other videos about what above line deductions are. This is a new above line deduction that you can take if you donate 1,000 single person, 2,000 married people. If you donate that to charities, you can write that off without itemizing. So that's really on top of your standard deduction, which is already huge. So that's a nice little addition in there as well. All right, so what's temporary? Let's run through these quick, easy temporary ones. Well, the SALT, if you see the acronym SALT, S-A-L-T, that's state and local income tax cap. It was $10,000. And for a lot of you throughout the United States, your property taxes were more than that. It wasn't fair. Well, I happen to live in a state where it didn't affect too many people. Arizona, getting $10,000 worth of state and local taxes was tough for most average people here in Arizona, but I certainly know there's a lot of states with much higher property taxes and local income taxes, things like that. So the great news on this is it's been increased to $40,000. That's a huge bonus for people that try to itemize. And now, if you have a lot of those type of taxes, itemizing becomes a much more legitimate option for you. So people with multiple houses and all these types of things, they're going to be able to deduct up to $40,000, but there's an expiration date on that. And you got to be earning under $500,000 a year. Whoops, wrong direction there. There we go. Some green energy credits phased out. Let's change that to most green energy credits are all phased out. That is temporary. And automobile loan interest deduction. So I call this one of those nonsense ones. Oh, what do you mean? Well, look, if you're itemizing your auto loan interest, you're probably taking the standard deduction. It's just most likely, okay? But you are allowed to. So if you get to take advantage of the state and local income tax increase to 40,000 and you can add auto loan interest to that, you might end up itemizing as opposed to taking the standard deduction. But with our big standard deduction, typically that's going to cover things like auto loan interest. One-time $1,000 federal contribution to baby savings accounts. Okay, this is that thing that nobody knew what to do with, and they're trying to figure out logistics. I'm sure Jamie Dimon at Chase Bank somehow will be involved in opening these accounts for you. Free money is great. You have a baby, you get $1,000 put into an investment account. Details we don't know yet. That's temporary. Tax relief on tips and overtime pay is temporary. And senior deduction, the new $6,000 senior deduction is temporary. All right, so what's eliminated? Well, most of the green energy tax credits are eliminated. And there's a timeline on each of these, but for the most part, by the end of this year, all the green tax credits, energy efficient and auto, buying a Tesla, all that stuff. You wonder where the fight originated, why somebody didn't like this bill? Yeah, the energy efficient car tax credit is gone at the end of this year. Various international tax benefits. There was just a bunch of gobbledygook that they were cleaning up and getting rid of. Pandemic era provisions, some of that stuff's getting cleaned up and getting out of here. And then the permanent repeal of the personal exemption deduction is gone as well. So key numbers, 20%. Well, that's the small business deduction rate. So anybody that has a qualified small business deduction with qualified small business income, they get to reduce the taxable income, the first 20% of that income. Bonus depreciation, 100%. We can depreciate that asset we bought for the business or the personal business asset, like a rental property or things like that. $2.5 million Section 179 expense limit, another one of those business credits or business benefits added. 35% starting in 2026. The maximum itemized tax breaks for clients in the top tax brackets. Okay. So it limits how much they can itemize, is really what this is going at. You're in the top tax brackets, you're going to struggle with itemizing. $15 million is the 2026 estate tax and gift tax exemption. That means if you pass away with 14 million, there's no estate taxes. 15 million and $1, well, that $1 will have an estate tax applied to it. $5,000 baby savings account contribution limit. So the government's going to give you a free $1,000, and then they're going to have incentives for you to contribute up to $5,000. There's the senior $6,000 senior citizen additional deduction, 0% tax rate on most tips and overtime. So be careful about that. It does leave room, wiggle room for some situations. 3 years tiered holding period for qualified small business, something or others. Not sure what that one is. $15 million increase increased gain exclusion cap for that as well, and then 75 million for that as well. I don't get it too much into the small business there. I do personally, but from a advisory standpoint, I let my CPAs jump in and talk about the business side of this. Let's see, July 4th, the dates that we need to remember. Well, July 4th was when they signed it into law, the big, beautiful bill. That's the BBB. January 19th, so right away this year, bonus depreciation. You can do it on pretty much anything you've bought from January 19th of this year. You can depreciate it 100%. Last day for most green energy credits is the end of this year. Okay. And estate and gift tax exemption remains at current levels, which is like 13 million and some change right now. It jumps to 15 million next year. 2026. And I bring that up because there is some confusion as to whether the 15 million starts right away. It starts at the end of this year, as far as I can tell out there. 2026, and again, it's tough because I kept finding things that said right away and things that didn't. So more reliable sources are saying it starts 2026, the 15 million. So January 1st, there's the estate tax rolling in, 15 million. January 1st, enhanced qualified business income deduction takes effect. That's that 20%. January 1st, mortgage interest deduction changes. So the little thing they added in there, again, the itemizing is not going to affect too many people, but they increase the amount of mortgage interest. The loan can be $1 million. It was $750. And then they also reactivated the home equity loans, and for some people that's going to be a big deal. You can now write off up to $100,000 not of interest but of loan interest in home equity loans. Okay, so consult the tax attorneys for that one on whether you can start doing that or not. First, let's see, first decennial oh, this was a qualified opportunities. Oh, look, there's so many provisions on here. The qualified opportunities zone designations have some changes coming as well. December 31st of 2026, deferred gain from pre-2027 qualified opportunity zone investments must be recognized. 2027 student loan exclusion inflation adjustments begin. And estate and gift tax exemption inflation adjustments begin, meaning they are going to automatically raise every year these dollar amounts, these limits for inflation numbers. Okay, so they're going to make them bigger every year. 2028, last year for the baby savings accounts. Okay, so 2028, you're not going to be able to do those any after 2028. So any babies born in 2029, you don't get the free money. Last year for automobile loan interest deduction. So again, it's somewhat of a meaningless little addition to our deductions that we can do if we itemize. Then last year for tip and overtime exclusions is 2028. 2029, January 1st, might as well been the end of last year. The senior deduction goes away as well. So all the way through 2028, you cannot take it in 2029 and 2030. The SALT caps revert back to $10,000. So hopefully somebody fixes that one, because I never thought that was fair. That's the state and local income tax deduction that got bumped up to 40,000, which was a good idea. All right. So I'm hoping that that's a quick, easy rundown. There's a bunch of gobbledygook that doesn't really apply to the vast majority of people, whether it's opportunity zone stuff or some of the more intricate business deductions that are out there. There are other things, but I tried to hit some of the more important ones that affect as much people as possible. And I'll have more ways to break this down. I do have another video kind of really honing in on what's going to affect retirees right away. And so that's a good one to check out as well. All right, everybody, I hope that helped. Quick, easy rundown, some of the basics of this new big, beautiful bill. Check out our channel if you haven't subscribed. We put new videos on every single week. I try to keep everything as updated as possible. Yourinvestmentcounselor.com if you want to meet with me for any reason, and fpfeaz.org if you are looking for more financial education. That is the nonprofit that we run here in Arizona. We do classes nationwide, and they are free to join anytime you want. fpfeaz.org, and we will see you next week. Thanks, everybody.